Welcome to Common Sense Investing. My name is Cameron, and you're here for another Monday evening live stream talking about microcap stocks. And it's good to be here because I missed last week. I was sick and didn't have a voice. I'm lucky to have a voice now. I haven't had a voice all week, which is an absolute nightmare, losing your voice when you're basically on YouTube talking all day for either my career or on here. So having a voice is something that you need to talk about microcap stocks. So my apologies for basically skipping last Monday. I don't think I missed much, right? The markets have been pretty bad since the start of 2025. Really went downhill around the third week of February. There's cracks showing up in about the first week of January. And of course, it's Donald Trump and all the tariffs. So I really like this slide here. I mean, I think a lot of microcap investors can relate to it. Basically, we're being beat up, punched down, lying on the mat. The guy's got one arm up. Like, do we give up? Do we just go all cash at this point, right? This is, I think, how a lot of microcap investors are feeling right now. Just given the macro market conditions and the way everything is going. So welcome if you're watching. As always, I have a presentation to deliver to you. Feel free to put comments in, questions. When I'm done my little presentation, I will stick around for some Q&A. We'll have some chat. We'll talk about any stock that you want to talk about. That I know. It is amazing how many microcap stocks are out there. I know a lot of the times I get asked to talk about a microcap stock. I can't possibly know about all of them. But my presentation today, see what you think. It's really random, my presentation today. A lot of new stocks to my channel. One of the best things about having a bad time in the market is there's more time to research. You really go through your portfolio. You go through it and you look at the stocks. You figure out a lot of the times on these down markets which stocks you have the highest conviction in and which stocks you have the least amount of conviction in. You've got time to go research some other stocks. Maybe there's some companies or some stocks out there that you missed out on because they rocketed up in 2024 and now they're down 50% off the highs. There's a lot of stocks to talk about. So I just wanted to take a little kind of a cross section of some of the stocks that I'm looking at right now and talk about them today, and let me know what you think. I'm going to talk about some things that make sense to me in the markets today and some things that don't make sense to me in the markets today. As always, don't forget, not a financial advisor, not your financial advisor. I mean it. I don't know anything about you. I don't know your experience level with microcap stocks. I don't know how much money you're working with. I don't know how much education, whether you can even talk about valuation. So this is how I invest, not how to invest. And if you're here and you're a new investor, good on you, right? It's good to be able to come here and learn and listen to some other investors that are more experienced in microcap stocks. So keep at it. This is really a fantastic place to be a retail investor, although it doesn't necessarily feel like it right now. It is a good time. I do have a smile on my face looking for some of the best stocks at the best valuations, knowing that I'm going to make money in the future, even though the markets are down right now. And boy, are the markets down. This is the S&P 500 year to date, right? Down 4.59%. In the past year now, if I pulled it up, I think the S&P is only up about 6% now. So it was up, we had a pretty good year last year, 10, 11, 12%, whatever it was. Now it's only about 6% on the year. Still getting pretty extreme fear. Every time I look, it's about 19, 20, 21. Still a lot of extreme fear on the market. That's not really changing. This is, AI basically putting this together. This is just the overall market reaction. Here's a whole bunch of analysts just today talking about the S&P 500. Obviously, nobody's really bullish on it. One person's looking to sell, but everybody else is talking about hold for various reasons, from preparing for Liberation Day, which is tariff day, to basically, the old recession talk that people are worried about. So the markets have been bad. And don't forget, I'm a big believer in how to make money in stocks. Right there, William J. O'Neill. It's one of my favorite books. Guides a lot of my investing philosophies. And of course, what does William J. O'Neill says? But he says that 3 out of every 4 stocks follow the market trend. So you always want to trade in sync with the market direction. I've shown, I'm probably not going to pull up my list of stocks today on this video, but I've shown on my list even, I've covered 25 stocks for 2025, or I introduced 25 stocks for 2025. 3 out of every 4 of those stocks are down, right? So William J. O'Neill's basically nailing it again, 100% accurate. Maybe 25% of my stocks are in the green. None of them are up huge. Some of them are just in the green, and 3 out of 4 of them are in the red, because guess what, right? The markets are down. And when the S&P 500 is down 4 or 5%, a lot of the microcaps are going to be down 15%, 20%, 25%. That's just the nature of the beast. So we need to worry about that. Canada, not as big of a factor, right? Believe it or not, the TSX year to date up 1.21%. That doesn't make a lot of sense to me. That's okay. Canada's obviously in trouble with tariffs, an election, absolute chaos right now, and somehow the TSX is up 1.21% while the S&P 500 is down 4.5%. I think that's a little crazy. That's the first thing that really doesn't make a lot of sense to me. A lot of articles like this, and I think this really summarizes it here. Bigger picture is the U.S. economic GDP revisions are being revised lower for the first time in years. This is what has people worried about recession. If all of a sudden, for some reason, this changed, because again, these are just estimates based on tariff fears for the most part, right? Because a lot of stocks, forward earning estimates for the S&P 500 continue to move higher. Companies have been reporting pretty good earnings. They have dropped their outlook, but their outlook is still okay. Their outlook of most of the stocks that I've been looking at in earnings, even though it's down, their outlook is a little lower than what they received in 2024. It's not bad. It's not indicating recession, right? So a lot of the stocks that we're seeing are still pretty economically viable and doing well. The reason is that the stock market's worried is these GDP revisions, basically guessing that these companies kind of have it wrong with their outlook, and thinking that there's going to be more of a recession in 2025 than a lot of these companies are expecting. I think it's a little overblown. I don't actually, other than following this and just saying that the markets are down, so the M is out of can slim and 3 out of 4 stocks are going to go down, I really don't try to time the market too much. I am looking for microcap stocks. I am looking for 3, 4, 5 days in the green for the S&P 500. That would indicate to me that there's a bit of a turnaround, and that would indicate to me that, maybe it's time to just deploy some cash into some microcap stocks, that it's time for a bit of a turnaround, and that the M might be coming back into can slim a little bit. But I'm not trying to predict the future. Basically, I'm going to let the market tell me, and, wait for that 3, 4, 5 days, at least a whole week kind of thing, of potential market turnaround in the larger markets, in the main macro markets. In microcap stocks, I'm doing what I always do, right? Nothing really changes. I look for companies with the best sales growth, because sales growth drives everything else. It drives the bottom line. It drives all the earnings, right? Good sales growth. If you could find a company with good sales growth that transitions into good quality profits, good quality net income, good quality EBITDA, whatever you're looking at, whatever your favorite valuation for that company is, right? You're looking for revenue growth, transitioning into good earnings growth. Right now, all that's happening for me in 2025 with the markets going down, as bad as it sucks to, every day kind of the portfolio's down a little bit, try to protect my capital as best as I can. Unfortunately, I've had to trim some stocks, sell some stocks just to de-risk a little bit given the market economic conditions. But I mean, when we entered 2025, the markets were so good. I would say that the multiple expansion for a lot of the companies, a lot of the stocks that I was looking at was not very high. The slice of the pie for multiple expansion was pretty low. And of course, this is return drivers for 10x stocks. So to get a 10x stock, you need a company that's got good sales growth, delivers high quality net income. And then of course, the third factor is multiple expansion. And multiples were high at the end of 2024. Well, guess what, right? One of the things that I'm seeing is that in 2025, now that stocks have been coming down, it's time to go look at a bunch of those stocks that we quote unquote missed out on. Maybe we didn't think we'd buy more of. because all of a sudden that multiple expansion with stocks coming down, as bad as it is to see your portfolio go down, there's a lot of extra opportunity out there where I'm finding a lot more companies, a lot more stocks right now that do have sales growth, that do have good net income growth, that, hey, they're a lot cheaper today than they were 2 or 3 or 4 months ago, right? And if they continue, if the company continues to improve, forget about the share price. If the company continues to improve with sales growth and earnings growth, I mean, potentially in the future when the markets recover, this multiple expansion is also sitting here. And the likelihood of getting one of those 10x stocks is a lot higher, right? So I stick to what I'm looking for, which is, valuation. I always run my valuations, volume and direction. Of course, right now, volume and direction is bad for most of the stocks just because of this, the news and the macroeconomics. So right now, I'm focusing a lot on the best quality companies at the best valuation. Anybody ever seen this comic? I like his little skit there. I haven't seen the whole thing, but I know I enjoy. He goes on this rant about things that don't make sense to him. Basically, we're all molecules made up of water, and somehow all those molecules are tied together, and all those molecules know that they're Cameron. It doesn't make any sense, right? We're on a rock just hurling around a giant ball of gas that's on fire, and it doesn't make any sense. Sometimes that's the market, right? Looking at a few of these. McCoy Global, 2024 outstanding year, 11% growth in revenue. I think it was 29% growth year over year in Q4. Q4 was outstanding. 36% growth in net income, improving adjusted EBITDA margins, increased percentage of sales from the growth driver Smart TR products, solid cash production. They actually increased their dividend, and they're buying a pretty significant amount of shares. And they could do that. I'm not a huge fan of share buybacks. I'm not a huge fan of a dividend. But really, a lot of the money, a lot of the CapEx that they needed for growth has already been spent. So all they're doing is marketing and selling these new Smart TR products. They don't have a huge use of this cash, so they're putting it into other places. And it's a really good idea, and it's been a really good company in 2024. Today, McCoy Global released that they won their Spotlight on their New Technology Award. So this is one of the winners of the Steam Spotlight on New Technology Award at the 2025 Offshore Technology Conference in Houston, Texas. Talk about great marketing, right? This is the product that we want to succeed, that they want to succeed, that's going to drive this company forward in the future. Man, look at it still struggling. Just does not make sense right now in the market. It just does not make sense. This is a one-year chart. You can see, before shit hit the fan, when the markets were still good, share price was up to like 385, all the way down. It's been struggling, right? New lower lows here all the time. And it's recently, with all this good news, 2024 being excellent, 2025 outlook looking good, new product, free marketing, wins an award, and we're here somehow, right? Like, what does a good company have to do to get some attention around here, to get some share price going up? It's absolutely stunning how good this company is and how share price is struggling. This is a 3-month chart. You could see them fighting to get share price up. Share price was all the way down here at like $2.30 not long ago. That is absolutely insane. You can see this little spike down here. That's back when Trump took office, right? That's basically the first part of January. And tariffs, the word tariffs was starting to get tossed around. $2.20, $2.30. So yes, shareholders have made a little bit of money, but my gosh, what a battle for a good company. Absolutely nothing bad reported by McCoy Global, and they still can't get share price momentum. It just does not make sense in 2025. Simply Better Brands, not my favorite company. I really don't like the whole protein-based plant nutrition kind of company, not my kind of jam, right? But you don't have to love every company that you're invested in. You don't have to love every stock out there and what they do, right? We're here to make money, not fall in love. Look at all the good news, right? Uplist onto the OTCQX. They hired this accomplished marketing person that's supposed to keep the sales going. They got rid of their seed oils, so RFK Jr. can't shut them down. This is probably the biggest news release of all the news releases. Not a lot of people talked about it, right? But you do not want to be a seed oil company in the United States right now. So great news releases from Simply Better Brands. You know, people always point out to me, they always fire this up. You know, all the sales on Amazon, this is just Amazon growth. They're being released in Costco, Walmart, is it Target? There's a whole bunch of new locations that TrueBar is being sold at. And growth looks pretty good for Simply Better Brands. You know, the company here is talking about continued growth momentum. And that's pretty bullish considering, you know, the recent growth has been 365%, numbers like 596%. So when they're saying that basically the growth momentum is continuing into 2025, that gives people some pretty high expectations. And then they say that they're going to release their year-end earnings sometime in late March. March 31st. Make it make sense. Shareholders can't wait a day. They can't wait a day. Doesn't make sense to me. Share price is holding up nicely all through March, all through February, all through January. I think pretty sure this is started January, right? Share price is holding up pretty good. You know, it's up a little bit. It's down a little bit thanks to the Trump effect. But they say that they're going to release earnings in March 31st, people decide to panic. It went down to, I think, 87 cents Canadian today after holding above $1 for the past 3 months, just because they said they expect to release earnings early in March. And March 31st, people can't even wait till the end of the month. They panic. Share price is down. Make it make sense. I mean, it's not even my favorite company and not even my favorite stock, but to see it go from like $1 to 87 cents just today because of earnings, that isn't even being late filed, but just because basically they kind of made a pinky promise saying that they get it in by the end of March, and they're not getting it in by the end of March. Absolutely fascinating. This one doesn't make any sense right off the bat to me, right? I put a post out today. Enterprise Group announced a normal course issuer bid, buying back their shares. Does anyone really like this? Nobody responded that they like this, right? So you can see here, share price of Enterprise Group has really dropped recently. You know, it was up quite a bit there for a while, $2.50 here, I think, $2.65. It's now down to $1.37, $1.38. It's down entirely due to their own earnings reports. This is really nothing to do with Enterprise Group, anything to do with the larger markets. You could argue it's a factor. The larger macroeconomics are a factor for every stock. But I mean, realistically, when share price drops on your Q3 earnings and share price drops on your Q4 earnings, this is due to your earnings, right? Make this make sense to me. December 12, 2024, Enterprise Group announced the closing of the previously announced bought deal financing and exercise of an over-allotment option. Financing, they raised money. They raised a lot of money, a lot of dilution. December 12, 2024. And here we are, March 31st, and they're buying it back? That just doesn't make a lot of sense. Why go through all that effort? And this was a lot of dilution. This indicates share dilution of 26% just from the last quarter of Q3 2024 and 55% dilution in total for 2024. In fact, Q4, their weighted average shares out were 62.7 million. And in Q1 2025, their weighted average shares out was going to be 77.2 million shares. So this was a lot of dilution. Shareholders are already understanding that there was a lot of dilution with Enterprise Group, and their earnings per share were going down because of it. However, they sold it to us. They sold it to people, saying that this funding initiative will support the company's continued expansion plans as it seeks to capitalize on the robust growth opportunities in the burgeoning natural gas turbine sector. Okay, dilution sucks, but they're taking the capital, they're using that capital to invest in growth, not share buybacks. Where the heck did that come from? Right? And of course, the company, we have to question the company because back then they said that there was robust activity fueling the current quarter. And as we all know, the complaint here is that the current quarter that they were talking about, Q4 2024, was an absolute disappointment. I think revenue was down 19%. So starting to wonder and I like Enterprise Group, I do, but I'm starting to wonder what the heck they're talking about. Are they just listening to Canaccord too much? Basically saying things that don't come true, giving a pile of share dilution to invest in growth and then deciding against the growth because they're going to buy back 5.6 million shares apparently, or 10% of the float. Make it make sense, right? This was back during earnings. Share price stayed pretty okay. And then we had the financing back here December 12th. And even after the financing, people were okay with it. Shareholders were okay with it. Share price went up. Your stock dropped on the macroeconomics and on earnings, right? So for me to make sense of this, I just can't. It's not super happy about it. Enterprise Group needs to do a little bit less of this, right? Playing around with shares in, shares out. We need cash. No, we don't need cash. Just worry more about this, please. It's 2 quarters now, 2 down quarters. Q3 was disappointing. Q4 was disappointing. Stop it. Stop with this silly stuff of shares in, shares out, right? Doesn't make sense to me. Just worry about profits. Acorn Energy. Newer company to me. I like this one. Reminds me of Beware Holdings. They're actually presenting at Planet Microcap, right? This one makes a little bit more sense to me. Small company. What they do is basically Internet of Things, right? Tracking. You slap this on a generator, you slap this on a compressor, whatever it is. They have a little hardware product that you slap on there, and it sends the signal out to either the optional satellites or through cellular, and then you could track your generator, you could track your compressor, whatever it is. You got cloud services on your phone where you could watch your equipment, and if you're a larger company, you got some data management. I like this type of company. And this company is improving, right? Revenue's improving, profitable, no share dilution, which is really nice compared to Enterprise Group, right? Calms me down, starting to calm down, no share dilution. Pretty good revenue growth, 36% revenue growth, 73% gross margins, net income per diluted share, about 74 cents. Good company, solid company, right? What I'm trying to do is find some of the best companies that are presenting. This is now, Ian here is saying 400 plus investors. I think there's 500 plus investors now going to Planet Microcap Showcase, April 22nd to 24th in Las Vegas. So some of the best companies, 500 investors. I think there's 100 companies going now. So basically 5 investors for every company. Not every company's share price is going to go up, right? So much capital, so many investors, only so much capital. It's going to be the best ones. Whatever stocks can give the best pitch, whichever stocks kind of rise to the top that are going to get the best share price gains. And I really like Acorn Energy. Come on down. So this one, I'd like to see it kind of, it doesn't make a lot of sense to me because earnings were so good. Right? Earnings came in right here. You could see the volume on earnings. People were really impressed. Nice big green buyer during earnings. Earnings were great. Share price went up. And then, of course, the big problem with this stock, it's on the pink sheets, right? Isn't it? OTC QB. And it's hard for people to buy. Yeah, I think it's not on the pink. OTC QB. And share price has been coming down. So not making a lot of sense to me. But this is one of those times where not making a lot of sense to me could be opportunity. I would like to see share price of Acorn Energy come down to this 200 SMA line here. And that might be a good opportunity going into Planet Microcap Showcase because this is a good, growing, profitable company. And it's starting to trickle down because the markets suck. Company didn't do anything. Look at their earnings. Company didn't do anything. Company's doing well. Company's doing great. Everybody likes the company. Look at that volume on earnings day. Stocks are going down thanks to the shitty market. And that's just the way it is, right? Some of them anyway. Intermap. Intermap announces 2024 results, 2025 guidance. They closed a $12 million financing recently in February, right? Company reported $17.6 million in 2024 with $2.5 million in net income. It's not bad. It's really not bad. I like Intermap. I do, right? One of the issues with Intermap, though, people have pretty high expectations of them. Share price was up, right? And the guidance for Intermap in 2025, revenue of 30 to 35 million, and adjusted EBITDA margin of around 28%. This is excellent. If you look at nothing else, you just look at this is excellent and good work to Intermap, right? But you do kind of have to look at valuation. You know, you look at the 12 million in financing, about 5 million shares of dilution that needs to get factored into those numbers. It should give them cash for a little while. When I look at the numbers, though, right now, based on their 2024 earnings, P/E of around 44.8 times. If you use kind of the midpoint, 32.5 million for Intermap, 9.1 million of adjusted EBITDA is what that gives them. Today, they were down 6 to 7%. So this 112 market cap is actually down. I think they did financing at something like $150 million market cap. So this is down even with where it was at financing. But even with the market cap being down, and go calculate your own enterprise value. I know everybody does that a little bit differently. I'm getting a 2025 expected price to sales on Intermap of 3.5x and a 2025 expected EV to adjusted EBITDA of 11.2x. The real problem right now, these numbers aren't bad. And again, I like Intermap and good for them. This is really nice guidance. This is a really nice year, really successful year, really nice numbers. The real problem for them right now, one of the things you have to consider in 2025, make it make sense for me to buy shares of Intermap. It gets really hard at these valuations. There's a lot of good companies out there with really, really, really cheap valuations now, thanks to the market being so shitty, right? I can go pick up some really good companies out there right now with a price to sales of below 1, you know, EV over adjusted EBITDA in the 5, 6. I could find some companies out there with a P to E of 5, a P to E of 6, right? It's really hard to convince me right now to buy a company at a pretty fair valuation, even a little bit frothy considering the market, when the markets are so bad right now, right? So good company. Intermap had a great 2024, great 2025 guidance. It's none of their fault, but I mean, I would like share price to come down. And this is one of those things. Make it make sense to me because the markets suck. And I mean, it's great to see a stock go up. And yes, those are pretty good numbers. I would be a lot more interested in Intermap if the share price actually came down kind of again to that 200 SMA level, right? $1.45, $1.50. I think that would really transition some shareholders away from these people who are trading the stock. See how it keeps going up, down, up, down. People are trading the stock. Kick out some of those traders, have the share price come down, and get in a little bit, few more like long-term investors. If long-term investors are going to get into Intermap, I think we'd be waiting for a little bit lower of a valuation. But congratulations, pretty good. Just, yeah, make it make sense. I'd like to see the share price just a little bit lower for Intermap right now. Last kind of rant, again, some things happen in the market that really don't make sense. Can Alaska Uranium Limited? Never really heard of this company. Somebody pointed it out today on my Patreon Discord. Look at that volume. What is it with uranium, right? Look at this share price spike right here. This is a little nothing stock that I haven't even been looking at. And I've had so many companies that I've been desperate to get some institutional interest in, get some block trades. Look at this. This is massive. These are just block trades right here. What the heck did this company do to deserve that? They had this tiny little microcap, had 3 block trades over $100,000 in value. One of them was $361,000 in value. That wasn't the only one. F3 Uranium Core, same thing. Look at the volume. The volume today spiked up over the bloody 10-week EMA. I don't know that I've ever seen that before. So an absolutely nothing, tiny little microcap stock just going down, 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 down. Absolutely a sea of red, and it gets this massive volume spike today. Again, this is a uranium company, and when I went and checked it out, 20 block trades, right? $100,000 for this teeny little uranium company that I never heard before. People just, buying or trading or whatever the heck's happening there, but a couple uranium stocks just blowing up right now. Make it make sense. Doesn't make sense to me. What do you think? What else doesn't make sense in the market that I did not cover today? Because that's the end. That's the end of my presentation. Kind of a random little snippet of stocks that caught my eye today. And some things that made sense, but a lot of things right now not making a lot of sense. And I look forward to doing a few more videos on some companies coming up, presenting at the Planet Microcap Showcase. I think that's a pretty good chance to get finally a catalyst and maybe try to catch one of those 1 of 4 stocks that'll be swimming upstream against the market and potentially making money. So if you're just here to watch the presentation, I'm done. And I'm going to move on to some Q&A and some comments and discussion. So if anybody has anything they want to ask me, questions, concerns, just to chat about something, now is your time. All right, let's do this. Where are we? How's everybody doing? You better not be making money. I'll tell you that. It hasn't been a great year, that's for sure. Let's see here. News from Roof today, 15-year lease extension from the Delta plant. CNO is all over the place share price-wise. High tide keeps falling, and man, don't get me started on well. Made most of my money in gold. Yeah, gold's a nice safe one right now. Roof is North Star Clean Technologies. That is a pre-revenue stock. However, I don't really love a lot of pre-revenue stocks. I'll cover about one per year. Roof is my one of 2025, only because they expect to have their facility done in Calgary this summer. So as of this summer, they're not really a pre-revenue stock anymore. The news that came down today is their pilot facility in Vancouver. Is it Vancouver? Abbotsford, somewhere in the Vancouver area in British Columbia, Canada. They just signed a new 15-year lease on that place. So that was their pilot plant. And yeah, they're a pre-revenue stock. They were getting around, $165,000 a quarter from their pilot facility in BC. And now that they signed a 15-year lease, North Star Clean Technologies is probably going to spend the money to commercialize that facility. So then they'll have Calgary up and running this summer. And that pilot facility already has some stuff there. So it might be a little bit quicker to get that Vancouver, Abbotsford, BC facility up and running. So that was good news for North Star Clean Technologies. They are presenting at Planet Microcap. I think some investors will want to become shareholders during Planet Microcap. So North Star Clean Technologies has been trading for around 34 cents Canadian right now. I hope that changes in April. I hope the last time they see 34 cents is April 22nd, because a lot of investors kind of like the story and buy into the stock. That would be nice. California Nanotechnologies deserves to be all over. They don't have anything. Share price went up because of they announced that partnership, right? It was good news. It was really good news, but no reason that share price should go up 20% when the markets are going down. So somebody got excited with California Nanotechnologies. Again, this isn't the first time it's happened. It went up to $1.95 once, came all the way back down to 80 cents. And it's rallied recently, but finally the little bubble broke, I think, today, and they're down again today. So yeah, I like California Nanotechnologies. A lot less risk, the lower price you can get it, obviously, right? So it tends to be very, 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 very volatile, Cal Nano. And hopefully that changes in the future, but right now it's volatile. Yeah, well, Hulk got clubbed today. Should recover, though. I think, it got clubbed today. I think it was down 25% at one point. For what reason? They're going to be late filing because of Circle Medical, which is a very tiny bit of their business. So that's one of the problems with WELL Health Technologies. Very complicated company. They have a lot of different business segments. Each business segment basically operates as its own company because they were acquired that way. And now one of those segments is going to be late filing, which is going to make all of WELL Health Technologies late to file, and share price absolutely cratered. Afterwards, it recovered, but only because they released good news that basically they said they released all their user acquisition numbers, people coming in using their services, their medical services. Those are way up. Those are way up. What was it? 32% increase in user acquisition for their medical services. Something like 30% of that was organic or something like crazy like that. Going off memory here, right? But WELL Health Technologies today was a classic case of share price got kicked in the nuts because of something that doesn't really have much to do with the company. And then it started recovering because people realized the fundamentals of the company look better. So company is improving, share price is going down, and people like that, right? Let's see. Kraken Robotics showcased their products in front of Mark Carney the other day too. Yeah, they shouldn't have done that. If they're anything like the Edmonton Oilers, they're going to be in trouble. And I'm only half joking here, right? It's a lot of people in the investing world are kind of superstitious, and they should have known that in the hockey world because Mark Carney went and skated with the Edmonton Oilers in a pregame practice, and that day, Connor McDavid and Leon Draisaitl got hurt. That was it. That's like their whole team, right? That's their two superstars. Those are the two guys. And they got hurt the same day that Mark Carney showed up. So I did not like that Mark Carney was visiting Kraken Robotics. I haven't looked at the share price of Kraken. It would not surprise me to see the technicals looking a little bit weak right now. That's probably the Carney effect. So bad for Kraken Robotics. Disappointing news about WELL, to be honest. Management is losing shareholder trust. I've heard that for years now. People love management or they hate management. I think they're doing a pretty good job, honestly. eTolf, one of my top holdings besides Gatekeeper. So I'm assuming that's Enterprise Group, just the American ticker, the eTolf. So that in Canada, that's E.TO. That's good. And long term, the company is going to live or die on the evolution power projects and whether those get sold or not. It is frustrating for me when I see a company, get institutional interest. This is what we're all waiting for as microcap investors. When I started covering Enterprise Group back at 40 cents, the dream was for Enterprise Group to get institutional interest. And now the problem is I found they got it. And are they using it to the best of their ability? And this whole, hey, we're going to dilute the piss out of you and then we're going to change your mind and buy back a few shares because their earnings sucked. That's maybe a bit mean, but it's the truth, right? That's what's happened. Their share price has gone down because their earnings were not very good. In the meantime, they're playing around with share dilution and buying back stock, and I don't really like it, right? I'll buy Enterprise all day long at $1.30 because a year from now it's much higher, much higher. Well, I hope so. That'd be good, right? Hash not reporting earnings is kind of frustrating. That's interesting. That's the first I've heard of it. When are they supposed to report earnings? I think their acquisition, Cannabis, I can't even pronounce their acquisition yet. They did report earnings, right? I think Hash has been a little bit busy. Every time, this stock tries to settle down for a couple weeks and kind of find a price, they do something new, different, crazy, hopefully productive, right? But they just closed out the Delta 9 acquisition, and then they just made another acquisition. So that's good on them. Anybody checked out Everyday People Financial? Looking pretty impressive. It is. So Everyday People Financial was impressive. They rocketed up. They were one of my top stocks there for a while. They went from 40, 50 cents all the way up to $1. One of the problems is that share price has been coming down recently, and that doesn't make sense. This is my whole video. It doesn't make sense because this is a company that offers creditor services, right? So they'll go collect bills for you, they'll go collect money, and then if you're the person they're collecting money from, they will go and provide you with financial services to help rebuild your credit. So all this recession talk in the United States and Canada should be super bullish for everyday people financial. But what happened is when their share price went up to $1, the word started getting out that people lost trust in management. I covered that story. I showed that information. I was very clear in my video. Earnings look good, but management has kind of a checkered history and they're trying to rebuild trust. So share price went up to $1. Share price came all the way back to like 70 cents or something ridiculous like that as that story got out about management having a bit of a checkered history. Once the shareholder transition kind of occurred, people got out that wanted to get out, that didn't trust management. People started buying back into everyday people financial, realizing again that this is a creditor protection, creditor collections agency in a time when we're facing a recession that's pretty bullish. And now share price is back up to what, 98 cents Canadian. So that's pretty good, right? They are growing revenue rapidly. And I mean, this is one of those stocks where bad times for the economy is good times for everyday people financial. Can you comment on Kraken prospects? Not sure what you're asking for. I mean, the biggest prospect they've had recently is the acquisition of that company headquartered in Colorado, I think it was, of all places, but their operations are in Houston, which makes a lot of sense. I covered that on my last live stream. The company they acquired, I think 1.1 million net income or something like that. That's not what they bought this company for. In my mind, they bought the company for the technology. So Kraken previously bought Pangeo Subsea because they have the acoustic LiDAR, right? So Pangeo Subsea's products can actually see below the surface bed. So if you're going to do like an oil pipeline or something where you need to see below the surface bed, you would use Pangeo Subsea. They've renamed that now to Kraken Robotics, something or other, some other name. But essentially that was the technology that they had. The problem is it's expensive. Not everybody needs that kind of depth to their survey. So what they did is they went and bought this other company based out of Houston, and they just do LiDAR. So that's the quick, that's the easy, just scans the ocean bed. It doesn't go below the ocean bed. It's the quick, more efficient, more economically friendly way of surveying the ocean. It just gives you the ocean floor and anything else, right? So now Kraken Robotics has both products. They've got the acoustic LiDAR that goes below goes below the ocean floor, and then they've got the cheaper LiDAR version that just captures the ocean floor. And now they have both different technologies. Kraken is turning into basically a one-stop shop for anything in the ocean, is basically what they seem to be doing, right? Yeah, evmt.v, so that's Evome, released a press release. Oh shit, it was bad. What? I don't know that I've seen anything like that. Last month, Evome announced restructuring to their debt, looked pretty bullish. Then they announced that maybe they're having some problems. They did a little bit of cycling of management. They brought in, I think, their CEO that had left a while ago, something like that, right? They brought in new old management to kind of take the reins on this company because they were having trouble selling one of their large assets. And then basically today they dropped this press release kicking themselves in the nuts that basically says we're out of money. They can't afford to pay for their auditors. They are still selling to their customers, basically running through their inventory. And that's about it. I mean, the deadline for reporting their filings is still a month from now. So they basically put out a press release today saying that in 1 month, we're not going to be able to file our earnings or our filings for the year-end results. And so basically shareholders have been giving a month's notice that potentially Evome is going to face a regulatory halt, and potentially if the regulatory halt goes on long enough, they could in theory get delisted. Maybe not, because they have assets. It's a really weird one. Go take a read. But basically, share price of Evohm was up to about 14 cents not long ago. 14 cents. And today it was down to 1 penny. And it's been trading for about 8 or 9 cents for the past 3-4 months. Like, it went up to 14, but it's been pretty kind of stuck there at 8 to 9 cents. They're down to about 1 cent. So terrible news for Evohm. It's really a lottery ticket right now, right? Like, if you're willing to take the risk that they actually do sell their assets and they can pay to get their filings audited, then maybe this goes back up to 8 cents. It's selling for 1 penny today. That's definitely a lottery ticket, but man, that's freaking high risk, right? Your thoughts on Zoom? You talk about revenue growth. This business just does just that. Yeah, nobody trusts them. I put out a Substack article on Zoom Technologies talking about it. There's red flags that this company has that people don't talk about. Now, maybe the red flags are a little bit overblown, right? One of their largest customer, allegedly, I don't know for sure, but allegedly it's Shine. And that Shine is a fast fashion brand out of China. I mean, if you want to pick a company that's enemy number one in the United States right now, it's a Chinese e-commerce company. So there's risk that Zoom can lose their largest company. The Shine company, customer A on their filings, is 40% of their revenue. And there is risk that they can lose that. So that's the concern. That's why, valuation isn't very high on Zoom. Sometimes I know a lot of people say, oh, microcap stocks, the market's got it wrong. Sometimes the market's got it right. Sometimes stocks are cheap for a reason. Now, I own Zoom, so I still think it's going to go higher than the 63 cents it's trading today. I still think that's a little bit low, even given all the risk. But I mean, it does have risk. Yeah, well, not doing well. It'll probably recover. I'm not too worried about it. Minor things. With increased defense spending, shouldn't OmniLight be riding tailwinds? Yeah, I think so. That'd be nice. Can't wait for that one. I spoke to OmniLight, right? Like, they're not marketing their stock. They're not a very loud company. There's tailwinds for OmniLight that the company is not talking about. They're just not marketing their stock. Every microcap investor says they want a quiet, boring company that doesn't market their stock until they find a quiet, boring company that doesn't market their stock. And then they complain about it, right? That's the way it goes. But that's what OmniLight's doing right now, or not doing right now. $16 million market cap right now for OmniLight. They own about $10 million in cash and cash equivalents because they own 6.9 million shares of California Nanotechnologies. Okay, when Cal Nano went down to 70 cents, their cash went down. But when Cal Nano went up to $1.95, their cash went up. So I mean, basically, if California Nanotechnologies goes back up to like $1.50 share price, then 100% of OmniLight's market cap would be in cash. They have about 3.5 million cash now, and California Nanotechnologies shares. What risk is there in that, right? $16 million market cap, $10 million between cash and shares of California Nanotechnologies. The issue with Wells Management is they could have said they were delaying announcing their earnings earlier, like months earlier. Yeah, maybe, absolutely. I won't argue that, although I just did, I gave Evohm shit for doing that, right? Like, if you don't know, you don't know. If the tariffs are not as bad as expected, the market will run. Yeah, potentially. I deployed a bit of cash today, banking on that. Not all of it. I'm still quite high in cash, but I did want to gamble on Liberation Day, or whatever it's called, April 2nd. I did want to gamble on Liberation Day not being as bad as people expected. I'm actually also gambling that GDP in the US isn't going to be as bad as expected. I know everybody thinks that the United States is like the fall of Rome and everything's going to crash. I don't believe so. I think the United States has a stunningly good economy. Even if they get a recession, it's probably going to be a minor recession. And I'm going to happily invest through this downturn because I'm not seeing the next Great Depression, I'm just not, right? So if the market wants to give me a better price on some of my favorite companies, I'm going to take it. And I don't think tariffs or the recession is going to be as bad as people think. EVMT dropped hard. I did read your comment on the Discord. Can you speak about the issues with EVOM? I think I did. I don't know the issues is the thing. What I'm speculating on is that they announced this a month in advance. They just had new management come in. Basically, I'm speculating that the internal operations of EVOM right now must be an absolute shit show, right? If it looks bad to us through a press release, I can't imagine how bad it is in the boardroom down at the company. It doesn't seem to me like there's a lot of, what's that company? Amped, I used to cover. APMD, was it APMD? This is a company out of Vancouver. It was two companies that were kind of running side by side. They had co-CEOs and they were always fighting. There was always some kind of drama. I mean, if there's one thing that I don't want in microcap stocks is internal drama. And really, I'm speculating, but based on this press release from today, it seems like there's some internal drama over at EVOM. And they need to sell that DeMar asset, right? They haven't been able to sell it. They brought in the new management or the old management. We thought, I think the outside investors looking in thought that was done so they could sell that asset and move on with life. And instead, what the new management did is dropped a press release saying, we're done in a month. So that's a bit surprising. And I think the bigger question for me is that we don't know what's going on over there. That's why share price went down so low. I'd be much more concerned with ADF's technicals than Kraken's. Yeah, look, there's no point even looking at ADF Group's technicals. I mean, you couldn't possibly be in a worse place right now than ADF Group as a steel manufacturer. Company's improving, $120 million in contracts, the largest backlog since the start of 2024. They have operations in both Canada and the United States. They've talked about using some of their cash to put robotics in their United States facility, and they're doing a shit pile of buybacks on the stock. Everything about ADF Group, and again, I'm not even super happy with ADF Group. I'm not super happy with their management. I think they did a ton of things wrong in 2024. Pretty pissed off at them, actually. But when you look at ADF Group right now, probably one of the best companies at one of the lowest share prices. When that's going to change, though, who knows, right? Trump's got to get off their ass. Tariffs have got to get off their ass. This whole negative narrative of, everything is terrible over there needs to stop. The company is doing well. So, yeah, ADF's technicals, nobody wants to buy it right now. Once that changes, though, I expect them to double. I do expect ADF Group someday to be a double. It's just when that happens, it's not happening today. That's for damn sure, right? Ryan Irvine, that's Ryan from Keystone Financial. Keystone Financial has a fantastic seminar coming up, I think April 3rd and April 10th. I'm signed up for one of those dates, so go check it out. I'll put their seminar down below in the pinned comment after this video is over. I love their little seminars for like $30. I think it's $30 to get in and watch them talk and pitch some stocks. Absolutely love Keystone. On Money Talks on Saturday, as one of his top picks was NCI. He started covering it since 80 cents in 2024. Yeah, if you go look at NTG Clarity Networks, that's NCI.V on the TSX Venture Exchange. I covered that in my latest article on my Substack for talking about April. And one of the things to look at is that back in, was it February? When was it? At the World Economic Forum, they had a big conference, and Keystone Financial and NTG Clarity Networks presented separately at that conference, and share price went up like 25%. So NTG Clarity Networks put on a good presentation. Keystone Financial put on a good presentation, and the share price went up substantially. And so it's good to see the synergies there, that somebody, a larger platform than me, Keystone has a pile of resources. They do a ton of research to have an organization like Keystone support NTG Clarity Networks is a huge advantage for the company. And don't forget, share price went up at the World Economic Forum presentation. And of course, NTG Clarity Networks is presenting April 22nd to the 24th at Planet Microcap in Vegas. And they're going to be able to do that, probably, my guess is, with their audited 2024 financials. So here's their audited 2024 financials. They're very good at presenting. I expect NTG Clarity Networks to catch some eyeballs at the Planet Microcap conference in Vegas. Will it be a catalyst? Who knows these days, right? It really depends on the markets. If the markets are bad, maybe it doesn't send the share price shooting up, but still, it doesn't matter. As long as they can attract some good, large, stable, buy and hold investors that aren't going to trade the stock every couple days, that's all that matters to me, right? Take on peso.v. Heard the name getting tossed around. It's expanded to 25 locations so far. I didn't like it. I looked at it before. It's the Dollarama of Mexico. People are really excited, get a little diversity, get into the Mexican market, Canadian listed stock, but really, it's in Mexico, so it had different tariff implications. And of course, it's a kind of a recession play, right? If people are struggling financially, they're going to shop at dollar stores more often, and they're opening all these locations up. Fantastic looking company, but I have my standards, and the margins are just brutally low. And I believe last time I checked, they weren't really profitable. So there's a lot of talk. Share price might go up. I never really talk about share price because, if you get enough people excited about a stock, I've heard about it too, right? This is one stock that keeps getting discussed all the time. Share price will go up. Just be careful that if share price goes up, that it matches the fundamentals of the company. I know one stock that I'm, finally don't have to listen to anymore is that, what's that Indian stock? It wasn't Quipt. It was Q something. There was this stock out of India, and everybody was looking for diversity into the Indian market. And there was one company that kept coming up and coming up and coming up, and share price went up to the moon. And I know recently they released earnings, and it was absolute shit. And share price kept crashing down. So not my favorite company. I didn't dig into it any deeper than basically looking at 1 quarter of earnings. I didn't like it, and I moved on. Any thoughts on ARBB? It's an IoT company, and they recently started to break out. It's a microcap at 74 cents, I think. I've never heard of it. ARBB. Why would I not have heard of it? IoT is right in their name. ARB IoT Group Limited. Let's see here. Share price is down 51% on the year. They're up a little bit recently. $150 million in revenue, but they're losing $2 per share. Earnings per share is negative $2. I can go take a look, but that doesn't sound like my favorite. If you go look at Acorn Energy, right, they're tiny little market cap and they're making money. They're profitable. And of course, Beware Holdings, again, tiny little microcap stock. They're profitable. So if ARBB isn't profitable or there's no profitability inflection, I won't invest in it. I only invest in stocks that are either profitable or within about 12 months of inflection point to profitability. I won't invest in a company that says, oh, we're going to get profitability in 2 years or 3 years. I just don't invest in that. So I don't know for sure. I just took a quick look on Yahoo Finance, and that's what it told me. I'd have to dig deeper into the numbers, but that's what I'm looking at. Biorem has had a nice pullback too. Yeah, I'm waiting to see. It's one of those stuff. Biorem's like Covalon though, right? Covalon was at $3. I sold a big part of my position because the technicals were bad. And then Covalon dropped down to, I think, $2.20, starting to level out. I'm probably going to rebuy my position pretty soon. Biorem's had a nice pullback because of the article from Matthew Martin from Rivmont. If you've seen that, in that article, Matthew basically details out how he suspects that the next quarter and potentially the next 2 quarters for Biorem could be weaker than shareholders are hoping for. And he based those numbers off the publicly announced backlog that is being reported from Biorem. And Matthew's a fantastic investor. I support Matthew all the time over at Rivmont, and he kind of highlights some of my stuff too, and I appreciate it. So basically, I would ignore Matthew at my own demise. And if Matthew says that earnings could be challenging, I have to be aware of that. And since, BioRem was at, I think, around $2.55 per share when Matthew released that article, and now it's down to what? $2.20? So it's already down 30 cents per share since he released that article. I think people are listening to him and they have some concerns. In saying that, I still like BioRem for the long term. If the next quarter or two or a week, share price drops, I'll probably buy some more, right? I'm still dollar cost averaging ADF group. I can't see this continuing forever. It won't. And that's the thing with microcap stocks. Too many people have to get away from the short term, or at least be aware of it, right? I always tell people all the time, and I know people on my Patreon Discord, because I do at least one video, one live stream per week on my Patreon Discord. People are probably sick of me because all of my educational videos, how to invest in microcaps, almost everyone starts with, are you investing or are you trading? You need to know the difference, right? Are you looking for short-term gains, or are you looking to, do some deep research, determine valuation, and say to yourself, okay, I'm holding this one till 2026 and I'll reevaluate. And I'm not saying one is better. You could do both. I personally do both. I do a little bit of trading. I do a little bit of investing. I tend to trade a stock to start, like when I'm first researching it. And then over time, as it builds my trust, I turn more into an investor. So I do both. But you do have to be aware that, just because ADF group is down now, if you can look into the future and you could say, this stuff isn't going to last forever. This is a really good company. It's done nothing but improve over the years. It's going to continue to improve. And you think that it's going to be like a $21 stock in 2026, potentially, or even say 2027, because we don't know how long the macroeconomics are going to last. That's a triple from today's $7 share price, right? So whether it takes 2 years to get a triple, or 3 years to get a triple, or 4 years to get that's still really good money. So it really, some investors panic in the short term, really should think about focusing on the long term. And I've seen the opposite, where some investors think too long term. And I'm like, look, dude, you can't use I'm holding for 5 years as an excuse because the company is doing a bad job right now. ADF Group isn't doing a bad job. They're doing a pretty good job, right? My only problem with Keystone is that they tend to push the same stocks a lot for their seminars. If you've seen one, it feels like you've seen the same stock picks as the year before. Yeah, sometimes I'd agree with that. In saying that, I do agree with that. It's tough because I find myself right now doing the same thing. I tell you what, in a bull market, like, people get upset at me right now. I'm not even making as many videos as I used to. In a bull market, I can get excited about 1 or 2 stocks per week. I could look at 1 or 2 stocks per week and say, yeah, I'm opening a spec buy position. This one's going up. I know it. Get excited. Buy a small position, watch it go up, maybe build up a larger position, right? Like, in a bull market, I'm more inclined to have more stocks in my portfolio. I'm more inclined to own more stocks. I'm not saying this is Keystone right now, but I would suggest that in a bear market, I tend to circle the wagons, right? And I'm less inclined to invest in 100 different stocks or a new stock every week or two, right? I'm taking my money. I'm more hesitant to spend it. And when I do spend my money, I seem to get the same stocks, my same high conviction stocks. Well, it's just at a better price. Now it's at a better price. Now it's at a better price. And I just end up buying my high conviction stocks in a bear market. And I'm not buying as many different stocks. So I do agree with you. I wish they would kind of pitch a few more different stocks just for the fun of it and to get a few more viewers, right? They need a few more viewers on their YouTube channel. At the same time, right now, if I had to do my kind of 2025 list again, given the market conditions, it'd probably be a list of 5, right? It's I'm really I'm really kind of circling the wagons here on some of my favorite stocks. Thank you. Cheers from Niagara Falls. Well, appreciate it. It's I've never been there, but it would be interesting to go there someday. I do like their paid service though. They do highlight good stocks. Yeah. Hey Cam, do you have any thoughts on the high tide pullback? Yeah, they need to figure that shit out. Sundial was buying them, owns what, 5 to 6%, something like that. Last time I saw it reported. With share price going down, I'd imagine Sundial's buying more and more. It's looking like high tide is potentially facing a hostile takeover. I'm not happy with the company. They did this to themselves, at least in my opinion. High Tide was supposed to be a boring retail brick and mortar company. Good core business, selling cannabis. Yeah, that's got some risk to it, but basically a good business strategy, opening up stores, profitable stores, beating the competition, do it again and again and again. It's very repeatable. It should be very safe. Instead, the company is distracted. They're running off to Germany. They're talking about Europe every day, and their core business is suffering. And that's their fault. That's their fault. That's just the e-commerce is going down. The new stores are struggling. Their core business has gotten worse because they're distracted. Share price went down. And the second the share price went down and made themselves vulnerable to the hostile takeover that people saw coming. So I'm not very happy. I'm a shareholder and I'm not buying the dip on this. They need to figure their shit out before I'll touch another share of High Tide right now, to be honest with you. Not very happy with them at all. Fix your core business. Stop getting distracted with everything, right? Are you aware of SFC, Sagicor Financial Company? No, sorry, I've never heard of that one. Never heard of that one. Gatekeeper is my IoT play. That's interesting. Doug better get that going. If he's got contracts coming up and they're going to be an Internet of Things type play, he started reporting that on earnings. That's good. And, fingers crossed Toronto, but also with Gatekeeper, the fingers crossed here is that, one of the good things that came out of this whole Team Canada thing is, provincial governments and larger companies being encouraged to buy Canadian. That could be a bullish long-term and short-term catalyst for Gatekeeper Systems. They sell primarily in the US up till now. All of a sudden, they're starting to get contracts in Toronto and other locations in Ontario, Canada. Is that luck, timing, or is that the whole, hey, let's buy Canadian type movement? And if it is, that could be pretty good for Gatekeeper Systems, right? Buying the dip in PFE, been working, and which are the best sectors that Trump can't hurt? He's hurting everything. I don't think there's anything you can't hurt. Essentially, when the American markets are down, everything's down. Don't worry about what Trump can't hurt. Worry about what's down that shouldn't be down, right? I mean, if you could find stocks that are down 50% from 52-week highs, and they're only down because the market's bad and fear and tariff fear and trade war fear and Trump fear and fear, but the company keeps improving their earnings. That's what I want to find, right? I don't want to find something he can't hurt. I want to find something that even if it's a little bit hurt, the share price is way more hurt, right? If I can find a good company that even if, let's say tariffs are going to impact them for a quarter or two before they diversify, but for some reason the share price is down 50%, love it, right? So I'm not looking for what he can't hurt. I'm looking for the best company that's going to find a way around it that's absolutely obliterated right now. That's what I'd like, right? Wonder if I had a great Q4 release today, but went down, what gives? Join the club. That's every stock these days. That's why traders, it's really hard to trade right now, right? There's so many stocks. I've been so tempted ahead of earnings recently to be like, I'm going to take a fund size position. I'm bored. Markets are down. Earnings are coming up. I expect earnings to be good. I'll take a fun little trade on this one. It'll go up 20%. I'll make a couple $100. Life will be great. No, it's just not happening in 2025, right? There's so many companies, they report earnings. Sometimes share price is up 10% in the first 15 minutes of trading, and then down she goes. I just showed you McCoy Global. I think McCoy Global's had one of the best years of any company out there, right? Growth, net income growth, profitable, growing, dividend, buybacks, everything going well. It was up for like 10 minutes, right? And then share price came crashing back down. And even now, it's, all the good news that they've had, they're doing okay, but no trader is really making money on any of it. So right now, I think in a bear market, the best idea is to be more of an investor, right? Find the best companies that are valuation is absolutely crushed because of some fear that's probably overblown, and think a little bit more long term, right? So I wouldn't worry about individual earnings. If you're looking at individual earnings, just look at whether or not the company is improving. Forget the share price. Share price is going with the market, right? ADF is tied to the macro economy, so if things slow down, their revenue can be cut in half. They're near all-time high revenue now. Could be the top. Oh, I'm sick of that. I'm sick of that. I'm sorry. I don't mean to disagree with you, but ADF Group is a microcap stock. ADF Group, if you go look at the history of the revenue, has never really gone down. They've had down years, but if you go look, every 4 years, ADF Group benches up. They're a tiny little microcap stock. They have room for $1 billion of potential top-line revenue. They're not even close to that. They're built for growth. So they do have down years, but in the history of ADF Group, they've never had revenue cut in half. They've never actually cycled down. They're too small of a company. They haven't. I know this is the only, I'd love to sit down with the Keystone gentlemen. I don't know if it'd be fair because there's 4 of them and 1 of me, but I know that's one thing that Keystone keeps talking about. Oh, they're top of the cycle, top of the cycle. They've never been top of the cycle. Over the past 16 years, ADF Group has done nothing but bench up in revenue. Yes, they occasionally have a down year or two, but overall, they're always benching up. Go take a look, zoom out on ADF Group revenues. They've never taken a hit like that. Sometimes for a year, but overall they always recover and then they always bench back up. So I'm not too worried about that. And I get riled up because I want to debate Keystone on this. Right? That's probably one of the few things I've disagreed with Keystone is ADF Group, top of the cycle. I don't see any evidence that ADF Group is top of the cycle at all. Discount stores see fall off in bargain shoppers. They save or don't shop. Low-wage gamers and small anti-gamblers are falling off, risk off. Some leisure cruises, pre-tariff cars are okay. Wow. Yeah, I'm not sure that's, let's see, fall off in bargain shoppers. They save or don't shop. Yeah. I think you're talking about Pesorama, peso.v potentially, Paul. I agree. I don't like the high volume, low margin. It's not that interesting to me. You kind of got to guess which direction people are going to shop, and I'm not good at that. Yeah, man, this market sucks. It looks like it'll be a range year at best, maybe worse. Yeah, and that's fine. Look, we're not down to 2022 suck, right? 2022, I could throw all my favorite companies in a bucket, throw a dart at them, and hit a great stock, right? And 2022, everything I looked at was every good company was massively undervalued. Every good company I found in 2022 was a clear buy based on valuation. We're probably kind of late 2023 levels where, some of the better stocks that were a bit overvalued starting to come down. You can now go out there and find some pretty good companies with pretty robust growth and good quality earnings, and they're not expensive anymore. I don't know if they're cheap, but they're not expensive anymore. I'm talking about like a Zcore, right? So even Intermap, which I covered in this presentation, there's no way in hell I was paying $2.50 for Intermap. Right now it's $1.90. I'm kind of hoping if it went down to $1.50, I'd probably buy quite a bit, right? But that's what I'm looking for is reasonable. It doesn't need to be perfect. It needs to make sense to me. And I do like that the market's kind of going to have a bad year, at least for a while, because I like these markets. I do. I shine in these markets. I am more of a long-term investor. One of the things I found in 2024 for me personally is I traded more often than I normally do. And the reason is I could buy a stock before earnings. They'd put in good earnings and I'd make some money and get out. So I can make money on a stock that I didn't even really research. You know, a couple hours of research, earnings are going to be good. Get in, get out, make my 20%. There wasn't even a lot of reason in some cases to be a long-term investor. But right now in today's market, I would suggest this is really a market for the longer-term investor. It's looking at some of these companies, looking at an Atlas Engineered Products. Atlas Engineered Products was what, $1.70, $1.80 not too long ago. Recently it hit 87, 88 cents. It's a Canadian home builder. Canadian home building stocks suck right now. Terrible, terrible conditions. But are the conditions going to be terrible in 2 or 3 years? Right? If that's what we kind of need to look at least in my opinion. So I do like these bear markets, these down markets, because I like that I'm turning into more of a longer term investor again, right? It's about finding the best companies at the best valuation and looking at it and being, okay, let's even just forget about 2025. This company, the stock is set up for 2026, and I think it could double by 2026. That's now a buy for me, right? PED is oil and has a book value 1.19 with no debt, which did get a few upgrades the other week to $1.50 to $2.25. You want to talk to Malachite. He's my oil and gas person. Right now, I'm not looking. Market's struggling enough right now for me to look at some pretty basic stocks, and to judge the price of oil right now is not something that I want to do, right? So right now we've got a couple really good dividend oil companies in the Discord, and they're paying out pretty good. So that's all Malachite doing that work, not me. Yeah, I'm not happy either with High Tide. When the news came out from Sundial, I was so dumbfounded. Well, I mean, when you shit the bed and your share price goes down, you're undervalued, and there's people looking around to buy you up, that's it's not a good thing to do, right? They had it made in the shade. I bought them originally at $2.99 Canadian. They went up to $5. Once they went to $5 share price, it was cruise control. All they had to do was take care of their damn core company. High Tide did, and they weren't able to manage that. So yeah, not happy. I'm now looking at silver. It's doing a cup and handle formation. If it's going to be crap year for stocks, then perhaps silver is a good hedge. PSLV is by Sprott and allows for physical delivery. Yeah, absolutely. That's fair. There's only so many commodity stocks that I'll allow myself to like, right? And it takes a lot. You know, I've seen over the years, I've been in groups of wealthy investors, you know, with junior miners, with junior oil, different commodities, gold, silver, and man, they've struggled. And if that changes in the future, then, you know, I'd be super happy for those people. But it's hard for me to change because I've seen so many of them struggle recently. But I will say, I mean, I just added 2 gold stocks to my coverage recently. Orbit Garant, Drilling, OGD.TO. And look, OGD.TO, on a bad year, everything going down. I introduced them at, I think, $1.20 to my channel. They went down to about $1.10, $1.08 in my Discord. People were buying it up, and OGD is now at $1.40. So that's a gold drilling company. I know Keystone likes that one as well. And they're up on a bad year in gold. And then another one is Dynacor. Dynacor right now is going down because they're in a little pissing match with one of the largest shareholders. That's good for me. It's driving the share price down. And at some point, I'll probably back up the truck for Dynacor. But I like the gold play. So yeah, maybe silver is next. I don't know. We'll keep an eye on it for sure. It's definitely that year to look at some of these stocks that other people aren't looking at and trying to find some opportunities, right? I'm buying Lyft near $11, which some man has a fund bought last week and looks like has plenty of cash. That's good. Give you one on metals. My guy suggests Hecla, HL, a broad spectrum miner. There we go. And typically I like the I like mining stocks. I like stocks that are affiliated with commodities and not right in the commodities. That's why I like Enterprise Group and McCoy Global and Source Energy for oil and gas, and not necessarily an actual oil and gas stock. So I do like, it's the old saying, who made money during the gold rush? Was it the people panning for gold? Not usually. It was the people selling shovels, right? And clothes and, other things that made money during the gold rush, right? Silver is doing a multi-decade cup and handle if you have a 30-year time frame. Oh, probably be dead in 30 years. I'm not going to make it another 30 years. I got 15 tops in microcaps. That's my time horizon, 15 years. Have I ever talked about Zedcor? Yeah, great company. I'm not buying it. Price is frothy, and people made their money. I'm not looking for a stock where somebody else made their money, and it's been very successful. This was a small cap discoveries pick. They made their money. Absolutely, congratulations to small cap discoveries for picking out this one. And then small cap discoveries recently highlighted a Zedcor like stock in Avantcor. That's under the ticker XX.V, and they are selling a similar competing product. And that's really the problem for Zedcor right now, is they had first mover advantage. That worked out very, very well from them. Share price has gone up significantly with that first mover advantage. They really caught everybody's eye and made a lot of people money. Now they're starting to face competition, more people in the market, more people recognizing that the market is there, all the different advances, getting their technology caught up to Zedcor because they don't have a moat. They just had first mover advantage. It's tough for me to look at Zedcor's valuation right now and get excited. Similar to Intermap. I just showed you Intermap, right? I like Intermap. I like Zedcor. I do. I like both companies. It's just right now, when there's a bad market and you could pick up really, really good companies at really, really good valuations, it's really hard to pick up really, really good companies at really kind of fair to high valuations, right? Why am I going to pay that fair to high valuation for a Zedcor when, there's some companies out there, Bioram, Covalon, I could list dozens of others that are kind of trading at some pretty dirt cheap levels right now, right? CDPR is exiting a bull flag potentially and looks like very undervalued junior. People trading some stocks here because I don't know what that one is. If you want to gamble, oh, there we go, on a silver stock. Cool. I'm done. An hour and 22 minutes in. Last chance. Questions, concerns, comments. Losing my voice. I missed my last live stream because I lost my voice. So I did pretty good today. I'm happy that I could put in an hour and 23 minutes of talking. I didn't think I'd make it this long, but if there's no other questions, concerns, here we go. At least one more. I also think the DRX ADF group is at high end of the cycle from an accounting perspective. Their current NPM, 16.6%, which is the highest ever. NPM is used as a gauge of business cycle. Potentially, but again, they've never been, no, I could be wrong, right? And Keystone could be right. I just like debating it. If they're at the top of the cycle, it is due to macroeconomics. The business isn't set up to not grow. It's set up to grow. They got robotics. They're probably putting robotics in their US plant. They're hiring people right now, and they've got a backlog as high as it's been in a while. The company is set up for growth. So if they go down, if they are top of the cycle, I would, we'll only know in a couple of years, but I would argue that they're down for a year, maybe they're down for 18 months, and then you watch, probably in 5 years, less than 5 years, 2-3 years from now, I bet they bench up higher. That's all I'm saying. 2 or 3 years out, I bet they bench up higher. So, but I get your argument too, not arguing with you. Potentially they are top of the cycle. I've been wrong so far, right? I've been arguing that they're not top of the cycle, and the market is betting they are. So far I've lost. And you're right. So we're not going to know for 2 or 3 years. Thanks for the stream. I really appreciate it. damn near 70 people in here. Thank you for your time. You could be anywhere. You're here with me talking about microcap stocks. I really appreciate it. I'd say have a good week, but I don't think we're going to have a good week. Have fun finding your favorite companies at a cheaper price. That's what I can say. And get some fun and entertainment and enjoyment and life happiness out of that. And hopefully we'll all be meeting up sometime less than 12 months from now, and every stock is up 100%. We're all laughing and smiling, right? That's all we could hope for. So I appreciate it, everybody, and I'll see you again in a week.